Welcome back to my channel. This is Soji Forex. On this channel, we teach and give counsel on financial market, how to profit from the bull and bears market using various strategy. So we try out this strategy, backtest it, and then share with you how you can make profit from the financial market without losing your capital. Today we are looking at MACD divergence trading strategy. This is part 2, and in this video we shall be covering what divergence is all about, also what is MACD, how do we spot divergence in the market, and then how do we make entry using divergence strategy. So what is a MACD? MACD simply means moving average convergence divergence. So it is an indicator that helps us to identify convergence and divergence in the market. And we have a special setup. If you don't have the setup, you can watch our previous video. And then divergence is when there is a disagreement between the price action on the chart and the window indicator. When they both disagreeing, which means that when the market is making a higher high in an uptrend and the indicator is making a lower high, it means divergence is happening in the market. Or when the indicator is making a lower low, when the main chart is making a lower low and the indicator is making a lower high, it means that divergence is actually playing out. And the higher the time frame, the stronger the signal of the divergence. So because we just spot a divergence does not mean we take entry immediately. So that's how we'll be looking at how do we spot entry. How do we make entry after spotting our divergence? So first of all, let's begin to identify divergence. This is step index and this is a H1 time frame. We want to spot divergence in this market. We want to look at divergence. Okay, so first of all, we already have one here. This is a divergence. In this place, you see that the market is making an equal high, which is a double top. But when we look carefully at our indicator window, the market is making a lower high. This is a divergence playing out right in this place. Okay, let's move further so we can see to get another one. Okay, this is another one playing out here. The market is actually making a higher high, but when you look at our indicator window, it is making a lower high. Here is another one. It's making a lower low, but the indicator window is making a lower high. A higher low rather. So this is a regular divergence happening in this market. There is a regular divergence happening here. There is another one. We are having a higher high, but you see our indicator is making a lower high. Making a lower high. So we keep moving. We have another one here, a lower low. By looking at our indicator is making a lower high, a higher low rather. So these things are happening now and here. They are all over the market. And this MACD helps us to spot every little divergence as it occurs in this market. Every little divergence as it occurs. So this is how to spot a regular divergence. It's making a lower low. And then look at our indicator. Our indicator is making a higher low. Okay. So these things are all over. They are everywhere. Everywhere in this market. Here's another one. We have this. That is a higher high. And then this is making a lower high. There is another one. We are having this lower low here. And then at the same time, we have this one making a higher low. You can see these two. Higher high. And the lower low. Okay, so these things can be spotted all over in the market. In the previous video, we talked about how we can take advantage of the Bollinger Band in order to get a high probability or a more effective divergence signal. You can watch that in our previous video to know how to combine the Bollinger Band on our main chart and then here is another one. So now let's look at how do we make entries. How do we make entries after spotting our divergence? So when we spot the divergence, we are not going to dive immediately into the market. We are going to make our entries in two ways. Any of this method can be used in making our entry. One of the first method is a break of trend line, which is this. You can have this break of a trend line. You wait for the break of a trend line and then probably a retest of that trend line. wait for a break of a trend line just as this, and then you wait for the market to do what? For the market to retest the trend line. You see here, the price broke this trend line down here and then retested it, and the market begins to go down. That is one way to trade this. Okay, another way is for us to wait for our MACD histogram, which is what we are having here. You wait for the MACD histogram to cross the zero line down. Once the histogram begins to form below the zero line, then we'll make entry and our stop loss will be at the previous high. Our stop loss will be at the previous high. Here is another one that we have spot. You wait for the break of this trend line, which is broken here, and then this is a test. Remember, the trend line is a zone, it's not a line, it's a zone, and the market went back to retest it, and a confirmation to that retest is the formation of this histogram below our zero line. Let's use the crosshair. You can see it. You can see the formation of the histogram. So at the close of that candle that is forming below, you make your entry and then you put your stop loss at the previous high of the market. Okay, let's see if we can get another one. Yep. Here we have another one. A break of a trend line to the upside, and then you can see that the histogram after the break of structure, the histogram as well begins to form above the zero line. Okay, the histogram begins to form above the zero line, and then you can see it. See the histogram forming from this point. Good. So you can see now that from this particular point there is a break of a trend line, and after the break of that trend line, we'll see our histogram begins to form above the zero line, the zero level of the MACD upward, and then we have a reversal. You can see how beautiful this trade plays out. Here also is another typical example of what we are talking about. Here is our histogram formation, already forming below the zero line. And then here is our main chart. And here we have this beautiful break of structure. It just happened here. And then after this beautiful break of structure, we have a cross. Also, the histogram begins to form below the zero line. Below the zero line. And here, the trend line was broken and market retested. So any of these will give you a reasonable perfect entry. To give you a perfect entry, here is another one again. You can see it. You can see this break of a trend line. This strategy is perfect. All you need to do is you wait, identify your divergence, and then you wait for it to play out. Here we go. The market begins to form around the histogram break of trend line. And then that beautiful move. This is a break of a trend line, the test, and then the histogram also forming above the zero line. Okay, your stop loss is always at the previous low. Put your stop loss here, and then you allow the market to do its own thing. This is another one. So please, if you are getting value from this video, do not forget to like the video, share, and subscribe to this channel. If there is any video you want us to make, please put it in the comment section and we will make the video. Please do not skip any part of this video. Watch it to the end. Thank you.